Thank you very much for coming to take our quiz to find out how much your bad credit costs. Feel free to come back as many times as you'd like to find out how changes in your credit profile can impact you financially in the years to come. This is your credit cost report for credit score range 580 to 639, which is deemed to be very expensive. We're going to find out what the cost is to you. Like I said, this credit environment is known as very expensive. The credit profile range will eliminate you from many loan programs, including government-sponsored programs from the likes of Fannie Mae and Freddie Mac. You will not qualify for down payment assistance programs in this credit score range, meaning that you'll have to bring extra money to close, at least 3%, probably 5%. It'll likely adversely select you on rentals in better areas. So in areas where there's a lot of competition for very nice homes, the landlords have their choice, and they're going to pick people with better credit. You're limited to loans that are within the FHA price range, which will eliminate some areas and some towns. Even then, you'll be getting the worst of their rates because most lenders only lend on FHA loans down to 580, and the government regulations say anything below 580 requires a higher down payment. So there is a dramatic opportunity for savings in this credit score range, which we'll go through now. So when compared versus an excellent credit score, which is over 740, people in the very expensive credit score range are going to pay a lot more for their homes. So we're going to use the example on the left side of the page here. Our payment examples for somebody with a 740 plus credit score would qualify for an interest rate today of around 3.25%. Versus somebody in the 580 to 639 range would be looking at an interest rate more like 4.25% per year, which increases your payment every single month from about 13 to 16%, meaning depending if you're doing the $250,000 or the $300,000 loan, it's going to cost you an extra $44,000 to $51,000 over the course of 20 years in the home. Be more even if you stayed for the full 30-year term of the mortgage. However, that's a lot of money to pay extra over the course of that 20 years. The other thing that it does is it would give you the opportunity by improving your credit score to actually get more house. So somebody with a 580 to 639 credit score paying the same payment they'd pay with a 580 to 639, if they had a 3.25% interest rate, instead of a $250,000 loan, you'd be able to buy a house more in the $300,000 range with a mortgage of about $291,000, which basically lets you get into different homes in different neighborhoods. $300,000 with a better interest rate would actually give you the purchasing power of a $350,000 house. Then we come to cars. So let's look at some examples of used cars. A very popular used car on the road today is a Honda Accord EX. In this example, we're actually going to use a 2018. If your credit score was 740 plus, you would qualify for an interest rate of about 4.34% versus a 10.34 market rate for people in the 580 to 639 range. That increases your payment every single month on the car about 15%, meaning that for the same payment, you could actually get a $33,000 car versus the $24,000 car, which that can actually get you into used BMWs, Mercedes, things like that if you have a taste for it, possibly even an older used Porsche. So it gives you definitely more purchase power. But on this car, if you did get the Honda Accord, you'd actually, over the course of a 7-year loan, you would end up paying $5,000 more. That's about 1/5 of the cost of the car extra that you would be paying just for having the bad credit score. So look at another example if you're more of a truck person. So let's use a 2017 Ford F-150, which is a really nice truck, by the way. My brother has one of those. But basically, the change in interest rate would mean that you'd pay about 15% more every month on it. It would actually give you the ability to buy a $44,000 truck, which might let you move up into the V8 or maybe the F-250 range, or even get a newer one with a better platinum package or something like that. So essentially, over the course of the 7 years of this loan, it's going to make you pay $6,600 more than you should on a $3,200 truck. So basically, this very expensive credit score is going to cost you over the course of 20 years well over $53,937. That's a lot of money. That's assuming that car actually lasts you for a full 20 years, which we know it won't. So it'd actually be even more than that, because after 7 years, you'd have to replace that car with another car and pay the same high interest rate. But there's really no reason why you should have to pay this much extra, this extra $50,000 in your life. Because there's very simple ways that you can get your credit score up to qualify for the better rates. All you have to do is click below on your landing page, and we will give you information about simple ways that you can get your credit score up to be able to afford these better things and save a lot of money. Thank you very much for your time, and I hope you have a great day.